Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Sara Mehle, Index Research Strategist at Nasdaq Investment Intelligence, to discuss what's driving year-to-date performance in the Nasdaq-100 relative to the S&P 500. Sara, it's great to see you as always. Welcome back to TradeTalks. And first, start off with an overview of performance for the Nasdaq-100.
Hey, Jill. Yeah, so this idea came to me today looking at October returns, since we are now somehow in the month of November. And I noticed that both the S&P 500 and the Nasdaq 100 on a total return basis fell about 2%. The Nasdaq 100 did outperform by a few basis points, but overall they were neck and neck there in terms of performance. So I wanted to look back and look at how this has affected year-to-date performance. The Nasdaq 100 is still leading the S&P 500 despite having a neck and neck month by over 22% so far this year. So the S&P is up about 11%, while the Nasdaq 100 is up 33%, again, on a total return basis. And this is through yesterday's close. So I wanted to go ahead and take a look at the last, since 2000 and look at what years we've seen this kind of level of outperformance from the Nasdaq 100 versus the S&P 500. And I went ahead and looked, and we are now, if the year were to end today, this would be the third strongest outperformance relative to the S&P 500, again, over since the end of 1999. The top was 2020, where we led by about 30%, and then after that, 2009, a margin of 28%. So other strong years I noticed: 2003, 2007, 2017. These are all years that we finished with a double-digit spread again over the S&P 500. So I think, despite having a relatively muted October, this margin of outperformance still lives.
And if we take a look at your second slide here, you take an even deeper dive into its performance relative to the S&P.
Just I wanted to dig down under the surface. 22%, that's an awesome number, but what makes up that 22%? So I looked at the attribution by ICB industry for the Nasdaq 100 versus the S&P 500. Technology, because of its overweight in the Nasdaq 100, is a real driver here, followed by consumer discretionary and healthcare, actually. And for healthcare, it's actually because we have a lower weighting in healthcare. So out of that 22% of outperformance, 17% could be attributed to allocation effect. So that's attributed to sector over and underweights. And then 6% is really driven by selection. So that's choosing different stocks from one another. So having different stocks in the indexes. We do know that there is plenty of overlap, but also plenty of stocks that don't overlap between the two. But overall, for the Nasdaq 100, what's driving the return so far this year? I have those listed on the side. It's part of those Magnificent Seven. We all know those names. So NVIDIA, Microsoft, Apple, Meta, Amazon, and Tesla. And again, technology, in terms of just looking at the Nasdaq 100 on its own, it's really been technology, consumer discretionary, and actually telecom that have driven the year-to-date returns. Those are the three that have added positively.
And finally, Sara, when you take a look at it from a technical perspective, does it show that it's setting up for a potential breakout here?
Yeah, so just before we get into the weekend, I always want to give a nice little technical update. So point and figure chart of the Nasdaq 100 index here. I'm using the Invesco QQQ Trust, symbol QQQ, which tracks the Nasdaq 100. I'm using its point and figure chart today. So it actually moved to a sell signal last week, the first sell signal we had seen in over a year. With recent action, we have seen the chart reverse up here. So now support has been established at that 345 level. The positive trend has been intact since February of this year. And from here, a move to 375 or higher would return this chart to a point and figure buy signal. I note that the all-time high, 405, hit in November of 2021. It remains about 11% away, but I really do think if you take a step back and you look at the action from between 22 and 23, that's all the action we saw on the chart for the year 2022. And if you look at 2023, it's been in my opinion, a beautiful organized chart. So this recent breakdown and subsequent reversal back up is a positive sign. And we are now sitting here 2 boxes away again from returning to a point and figure buy signal.
All right, Sara, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.